Hello, welcome. We are on the floor of the New York Stock Exchange. It's a Tuesday morning, and we are here with my guest, that is Mark Otto, designated market maker at Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, today we are a little bit flat again. Not much direction. We have seen a very good day for the Japanese market. We had a great surprise from the Bank of Australia. Another central bank was pumping liquidity into the market.
Yeah, it started out with Japan. So they were closed on Monday, so they missed the rally from Friday. So that's where you saw that big boost. The cut from Australia was nice to see as well. Moving on to Europe, we also saw some German manufacturing numbers that were good, and it puts the DAX is actually at all-time highs now as well. So even though we're sort of teetering around even, the S&P 500 keeps creeping up and creating new highs. So that's significant as well.
Yeah, the 1600 seems so far away now. I mean, we were really aiming to that psychological and technical level, and now we are well above that. According to some strategists, though, we might finish the end of the year around 1625. So basically, we are there. So what is going to happen from now until the end of the year? So would you expect sideways, the market moving sideways? Still not much conviction. What do you expect?
Well, I think the market's going to continue to look for a catalyst from here going forward. I think that 1597 was the big breach that we broke through, that 1600 level. We hit some resistance here at 1617 over the past couple of days. We crested above that. However, going forward, you want to really see, traders that I'm speaking to are saying that we want to see the market sort of build itself up between here and that 1600 support level and then push higher. So right now, what we're really looking at is sector rotation. Remember, for a while, it was defensive sectors that were really leading the charge, and we're holding off better on any type of sell-off. So I think now what we really want to see is sectors like financials are leading today. Sectors like technology to actually come out in sector rotation and push forward. So I think going forward, a lot of analysts are saying that we could end up the year somewhere up and around this area. As far as the S&P 500 earnings coming into Monday, about 70% of them had beat the estimates. However, again, we're seeing the revenues are not looking so good. So for the rest of the earnings season, it's not as good a picture. So I think that might not be a catalyst for us to actually push higher. And it does sort of play to the fact that we could hold off at these levels. But if we hold off here, hey, that's pretty good, right?
Yeah, absolutely. Absolutely. We can totally take it. So now we know that it's going to be a very quiet week. It is a very quiet week here at Wall Street, but we have some important economic figures coming from China.
Yeah, between now here and the end of the week, we're going to have some interesting data coming out of China. A lot of people are watching China simply because the macroeconomic data has not been good, and it's a little bit of cause for alarm. People that trade China are saying that long term they're on track. They're going to make their target for the end of the year. However, this information is significant. So between now and the end of the week, we're going to have the trade balance is coming out. We're going to have exports and imports. The trade balance is 16.15 billion. The exports are 9.2%. Imports are 13%. CPI comes after that is 2.3%. PPI is negative 2.3%. New yuan loans come after that. It's 755 billion. And then M2 money supplies is after that, and that's 15.5%. So that's a whole lot of data. I hope you broke your pen out for that one.
Well, they can replay it. And of course, we are going to look at that because, as I was saying here, not many economic figures, at least. Even though between, towards the end of the week, we are going to have few speeches from members of the Federal Reserve. Of course, everybody is looking at the central banks, and we were saying they are really supporting this market. Some people are even saying that it's a drag for this market. So the Federal Reserve keeps pumping, and the market is still happy.
That's all it is. I mean, central banks around the world seem to be backstopping the economies. Everyone's feeling pretty good with that safety net there. The continuing stimulus going forward is really going to be critical. I think that if there's any talk of easing on QE3 or easing on stimulus across the world, that'll sort of be like taking your foot off the gas pedal. We'll have to see what happens then.
We'll see. For now, we are celebrating. Thank you very much, Mark, for being with us.
Thank you.
Thank you very much for watching.